Hey, good morning, good afternoon, and good evening, everybody. Welcome to this episode of the Note Closure Show. As always, Scott Carson, excited to be here with you today. And I'm really excited about this episode because we've got a very special guest on today who's a rock star. And when he's made some transitions, some pivots in his life. And we'll get to that in a second here. But somebody who is tapping into one of the most distressed asset classes out there. And we'll cover that in just a second, but just honored first and foremost. This guy served in our military. He's a previous commercial airline pilot, but a Navy veteran. He's a co-founder of Gateway Private Equity Group. It's a real estate investment firm who focuses, on hotels, multifamily, residential properties. But between apartment complexes, Mike has owned and operated over 1,400 units, and he's always seeking valued opportunities. But Mike pivoted primarily from the multifamily to hotels and now focuses exclusively on this niche. So we have not had a hotel expert on here to talk about this asset. We've had a few people on that were supposed to be on that had to reschedule. And so we're really honored for him taking time. We got to give him a little bit of break too. This is his third podcast in a row today. So I don't know about you guys, but when you've been on booked on stuff, you might be a little scratchy. But Mike, first and foremost, thank you for your service and thank you for being on the Note Closure Show today.
Yeah, thanks a lot, Scott. I'm happy to be here.
So what attracted you to, well, first of all, were you, you've been investing for years. Were you investing when you were in the service or did you get out of the service? How did that kind of transition get into being an investor to start off with?
Yeah, well, it came after I got out of the service. I realized that I'm not a 9-to-5 guy. I don't have the mental aptitude to sit in a cubicle. I did it for a little bit and just got mad.
Yes.
I was just like, no, this is not the type of farming I want to do, which is the cube farming. Right. Like anything, it's like, what do you want to do? And probably like everyone, most of the people out there, I picked up the Rich Dad, Poor Dad. Yeah, it's kind of like the starting book for real estate 101, right?
Right.
And I liked it, changed my life. And when I got started, this was, I call it the PG days, pre-Google. So there wasn't a lot of opportunities out there to learn. The buying part was easy. So, basically, we went out and bought 8 units and failed miserably. Because it's not like I could Google how to be a landlord.
Right.
And basically lost everything because it's like, now what? I don't know how to fix things. How do I have to put an ad in the paper for tenants? This is how far back it was. Paperwork, I didn't know how to do that part. Failed, and then kind of gave up for a little bit. But then I was like, this is it. I know this is it. So I actually went and worked for, I was like, how can I learn? So I actually went and worked for a property management group. And I was like, now I can learn how to be a landlord.
Right.
I can manage some units and learn and find out what kind of paperwork they're doing and how to evict people and how to find people and all that stuff. And then, just kind of took a break, became an airline pilot because that was kind of what I was shooting for. It was my dream, and did that for a while. And then now I'm making money. And so then I got back into it, when I could use my own money like that instead of racking up credit card debt, in order to do transactions and things like that. But, that's kind of how it started. But it was that thought process of, I know it's the right thing to do. I know that real estate is it. When you look back in the history of mankind, who are the movers and shakers? If I'm not, in which I don't have the brain of like the Elon Musk and those things, you got to do it some other way. And it doesn't take a lot of brains to make it in real estate. You have to know what you're doing and have the right mentors, the right coaching.
That is definitely true. Who was one of your biggest coaches once you started getting back in the right track for a little bit of that stuff after you licked your wounds? I mean, I think every investor, we start off thinking, hey, we can figure this out. We'll do it, as entrepreneurs. it's kind of like, hey, let's jump out of the plane and we'll build the parachute on the way down, right?
Yeah, right. Yeah. And how's that going to work out? You're going to fail miserably like me. But that's a great question. There was, well, the people at the property management group, there's my boss at the time really pushed me, and he goes, this is how you do it. And he invested, and he kind of taught me all the things that he did. And he had some homes. And then fast forward, I had a coach that kind of talked about, this is how you use other people's money. And I was like, oh my God, I mean, it's like, I don't have to like buy a fourplex, hold it for 3 years and, and save up the money and, and then flip it. And then, because I was thinking, my way, it's like, all right, I could maybe get a couple hundred units in 20 years, it's going to take a long time.
Use your VA loan on the first one.
And then, and so that person really brought it out, and it wasn't just syndications, it was joint ventures, and just all these different unique out of the box ways of getting deals done. And then once I started doing that, and once I started getting bigger, and remember, it's mentorship and coaching is it. I mean, if you want to succeed, you have to be a good student and learn. I did a couple different coaching programs. One focused on the business side, and one focused, which I think is the most important one, is the mental side of it. And just finding my unique abilities, finding out what I'm good at, and putting down your day into a calendar, and just all this different, the mental aspect, because once you get out of the 9-to-5 job and now you're on your own, now what do? That time management part is extremely important, because before this, you'd sit there and get on social media and it's like, oh crap, it's been 2 hours later.
Yeah.
So you have to be disciplined, and the mental coach really helped me with that discipline on how to be a successful entrepreneur.
That makes a lot of sense there. So you're working for a property management company. How long did you do that before you started going out and buying stuff on your own?
Well, it was a while. So I worked for that property management group for a couple of years, and then I became that airline pilot.
Right.
Finished my college GI Bill.
Huh?
And so I was kind of working for the property management group, going to class at night, and later on became, the airline pilot. And then once I started that, it'd been several years later.
Huh?
Then I was like going, okay, I'm kind of over the pain of losing everything. I know this is it. This is the life I want. And so that's when we bought a fourplex and hired a property management group, while I was still flying. And that was kind of the start of the ramp up. And then, what happened is I got injured flying into Houston, bad injury. I tore my forearm trying to land the airplane. And while I was on disability, I realized that property management group was nickel and diming me.
Mm.
And I was like, no wonder this thing isn't making any money. So I actually fired him and started doing it myself, using that. Because then now it was like going, I'm not going to make those same mistakes that I did. Right. Now I have the knowledge from someone that owns tens of thousands of units, and that was it. I talked to my wife and I said, you know what, I think I can do this, because I was turning that little complex around, and that's, the rest is history.
Nice. Now, bought a lot of units.
Mm-hmm.
When did you make that? When did you discover hotels, or what made you make that switch or evolution?
Yeah, it was the cap rates were starting to compress in the multifamily sector, and it was I was getting to the point where it's like, you know what, I sold that complex a year ago, and now it's twice as much. And I'm like, it's a pig, I mean, it's not worth all, and I actually toured it, and I'm like going, they put laminate down and painted the outside, I'm like, really, and that's when I was thinking, it's getting really saturated. It's
Right.
starting to, and I actually had this group out of Idaho or Iowa, one of the I's, they came down and looked at a couple of my properties that they weren't even on sale. And they said, boom, I want to offer you this amount. And I was like, man, gosh, dang it. And I turned them down 3 times. And on the 4th one, they looked at this one property and said, this is it. This is the final thing. Here's how much we'll pay for it. And I'm like going, that's the most stupid number I've ever heard in my entire life. And I was like, what in the world is going on with this market and multifamily? But I was a fool not to take it. And I had that property 10 months and made almost $900,000 net.
Wow.
And I'm like, now what am I going to do? Because I was going to 1031 it. And that's when I was like, I'm not going to speculate, because right at that moment, multifamily became speculation.
Yeah.
Am I going to buy something at 3.5, hoping it goes to 3? And then what happens, like if you have the inflation now, what happens when that interest rate starts going above the cap rate? And I was like, I don't like speculation. So everything's about networking, right, in this industry. So I knew a guy that had a lot of years experience in hotels, and I started talking to him about it. And hotels are, if you do cap rate conversions, we really don't use them, but they're 8%, 10%, on up. And it's because HGTV doesn't have the hotel episode yet, right? So no one's thinking about it, right? So everyone, my brother's not doing hotels, but everyone's goal when they start with the fix and flip is eventually going to multifamily. And there's millions of people and syndications that are doing multifamily. It's just, it's saturated, and, God bless them, it's still going up. But at what point are we going to make that shift? And it's not there for hotels. As a matter of fact, it's going the other way, because of COVID and things like that. But what I did is I talked to the guy and I said, I'm going to make you a deal, because I had all the different coaching. So you're going to teach me everything you know about hotels, and you're going to run the operations for me. You're going to find the hotel. You're going to teach me everything, and then I'll actually give you a piece of the action if you do this. And there we go. That's long story short. That's how I got into hotels, because I just didn't want to buy multifamily at that rate.
It totally makes sense. I think we see it all the time. Multifamily over. So I think the same thing. Like, how are you buying that in such a low cap rate? People are literally raising capital, and they've got to buy something because there's money burning a hole in their pocket. And it's, I think back to years ago when everybody in California would slice your grandmother's throat for a 4 cap. Now they'll do it for a 2 cap. You know what I mean? Right. And then inflation raising. And so that's why I look back at trends. And when I first got into the note space back in 2007, 8, we were buying a lot of apartment notes that people had overpaid for. Some of these big gurus who were on stages that overpaid because they had money they raised, and then they ended up having to take a loss and walk away from the deal. And we picked it up at a big discount. We see that happen again at some point down the road. But like you said, hotels right now are really very distressed. When did you buy your first hotel?
Wasn't that long ago. It was 2017.
2017. Awesome. And when you're looking at a hotel, you said we don't usually use cap rates, but it's for us as investors, we like to convert things to cap rates to get things out. You're looking at what are some of the metrics? What are the things that you're looking at when you're evaluating a hotel?
Yeah, and it's a great question, because if we would have had this conversation in 2019, it'd been completely different.
Right.
But something that we did during COVID is, instead of cry and drink our way through COVID, we actually listened and paid attention and looked at the reports. And there's a lot of great industry reporting and analytics in the hotel space, where we can break everything down by each hotel class, each region, each different city, each neighbor, area of town. And we paid attention to that. So because hotels, one of the big differences between multifamily hotels is a business. Okay. And that's what people have to understand is it's no longer really real estate. It sits on real estate, but you're buying a business.
Right.
Okay. And you have to look at it that way. And that's why we really don't use cap rates, because we don't look at the NOI, because that just who cares?
Varies so much across the board with
Right. It really varies. So
Right.
we look at gross.
Yep.
What is it gross right now? And when you buy a business, whether it's a manufacturing or industry and anything, each type of business is there's a generality is it's worth X amount times gross. Okay. You buy one business and you sit there and say, well, you know what, a good variable is it's worth 2 times its gross. Okay. And then that's what you offer. Hotels, it could be 4, it could be 4.5, it could be 5 times gross. So we look at that gross, and then how can we get that gross up? Okay. Through putting our own people, by not using property managers, by using our own management, by looking at the vendors, it's just all these different things. But now what we do is, whether we're doing a ground up or buying something, is we look at the different drivers. Why, and what that means is, why are people driving to that hotel?
Right.
What drives them to that hotel? Pre-COVID, you'd sit there and say, man, you can't go wrong if you buy a hotel near a university. Okay.
Yeah.
Well,
pre-COVID. Same thing with like weekend Airbnbs around a university with a football game or basketball, that kind of stuff. Yeah.
Concert venue, it's until COVID happens and no one's going to school and no one's visiting the kids that go into school. So we look at the different drivers, and we looked at what hotels did best. And for you multifamily people, you know what a C+, B- is, that class. Those are the type of things that we like to stay in as far as hotels. It's the blue collar. It's not your high end. They don't have the restaurants. They don't have the conference space. But it's the free breakfast, the free Wi-Fi, and they're gone. It's more of a transient hotel. We look now, the ones that did really, really well are outside of a major metro, off of a highway, a major artery, and it has truck driver parking. Okay, because who kept America rolling?
Yes.
During COVID.
Yep.
And I was like, man, this out of the way old hotel that it's nice, did the best in our portfolio. And I was like, I can't believe it, because it was in a smaller town. And that's another thing during COVID, is nobody wanted to go into the major metros.
Right.
They didn't want to be around 5 million people that might have COVID. So a comfort inn is a comfort inn, whether you go into that city or you stay 20 minutes south or north or wherever, and you can save a little bit on the rate, but it feels better. It's that placebo effect. Well, it's only a town of 25,000 and it's off the highway. We get a breakfast, free internet, and then go the next day. And those are the type of things that people can afford. Truck drivers, the family of 3, the traveling nurses that were there. It's that blue collar, $80 to $100 a night, $120 a night instead of the $300-400. But they also don't want the $50 to $60 a night hotels, right?
Right.
You don't want to sleep with any bugs. But that's that changed our way. It's like, oh, okay, you know what? We're going to be blue collar hotel people.
Mm-hmm. Now, are you seeing a lot of those, like they where they do have a flag, where they are the flag like a Comfort Inn, or non-flagged hotels, non-flagged hotels being the lower value aspect of it? Or are you seeing some stuff that's really decent or varies?
No, I mean, we like flag. It's all about when you have a flag hotel, and depending on which flag, I have now attached myself to a company that has 90 million followers, as far as rewards programs. Okay. So I don't have to do any marketing. I don't have to do my own website. I don't have to do my own reservation system. I can just kind of plug and play into someone that everyone knows, and they want that rewards program. and they're going to go to Marriott.com or Radisson.com, enter the city, and boom, we pop up. That's why we do flag. We're thinking of, it'll be our one of our builds that we're going to do in the next 12 months. The only time that we would do a non-flag is if we do a boutique.
Okay, that makes sense.
Okay. I don't want Mike's Family Inn, that is competing with all the other flags. That
Sure.
doesn't really work. But what we do is, if you do a higher end boutique in a setting that has multiple drivers, and then what you can do is attach yourself to a flag, but not have to deal with all of their rules and regulations on how it looks. Okay, so if I build something in northern Arizona, let's say I want that Southwest feel, that mountain feel, I can do that. Make sure it's high end. It's going to be a small, maybe 50-room hotel. But then if I want a reservation system, I can attach it to like a Marriott and become what's called like an autograph collection.
Okay.
Which is the kind of the high end. And then I only pay them for the bookings they give me. Okay, but I'm using their 100 million plus people.
Right, their marketing machine. You're just tapping into.
I'm just tapping into their machine. Yeah.
Now, with hotels still really, I mean, it's really still one of the most distressed asset classes. I've got some friends that own and operate several, and they're still saying that. And this is here in Austin, which is one of the hotter markets in the country. They're still saying they're still at 50% what they were pre-COVID in a lot of cases. And they're a flag hotel in a lot of cases. But also from looking at a lot of the different things that we see on the distressed debt side of things, we see a lot of hotel notes that come to us where that's still the underlying factor. Vacancy is still, rack rates are down low still in a lot of cases there for you. When you look at your portfolio, the ones that you had, you said you had the one that was really good. What was some of the things that you maybe did to the other hotels? Did you to reach out to any of the cities, or because we see that some of our friends have been doing that? They reach out to see like temporary COVID housing, or looking if it's a lower valued hotel or lower brand, turning it into a transitional housing in some cases.
Yeah. So that's a great question. We did a couple of things. We did what's called day use. And what that means is, there's a lot of business people, men and women, that were used to going into their office, and now they're stuck in their dining room table with 3 kids running around and whatever going on. And it's really hard to concentrate on your work, do Zoom calls, because everything was virtual. So we said, hey, you know what, for $50, $60 a day, come to our hotel. You have a desk, you have free Wi-Fi, take a shower if you want, you can do whatever you want.
Free coffee.
And free coffee, but you have that sanity again,
Yeah.
So we did a lot of those day use, because the other type of day use things, they were shut down, like Industrious and the other ones.
That's exactly what happened to me. I had an office, executive suites. They closed the building for 3 months.
Yeah.
So that's the thing. Yeah. It's funny. I actually went and worked in the lobby of my hotel a couple of days down the street here.
Yeah.
And I didn't know that more hotels do it. That's awesome.
Oh yeah. Yeah. We did that. The hotels we have in Arizona, it's the only time I've ever say, thank you, California. But they closed the entire state down. They couldn't even do outside sports, which is, it just was amazing to me. And that's the best thing they ever did for us, because if you can imagine this, we would have travel teams that lived 4 miles apart from each other in San Diego. They would actually get on a bus and travel all the way to Arizona, stay at our hotel just to play each other.
Yeah.
So those, those type of travel teams really helped us. We went out and networked with different groups for the traveling nurses and gave them, and then of course the CDC, which is, a lot of the trucking and a lot of the commercial, type use machines. So those are some of the things that we did. And then some of the, to save money, let's say it was a 3 or 4 story hotel, we would just completely shut off the top floors. No AC, no heat, no lights, and we just completely shut them off and work as just a 2-story hotel. So we're doing things like that.
That keeps your cost down with cleaning, selling, power, but your labor costs as well too, I imagine, huh?
It did, labor, and the great thing, and one of probably the biggest difference between hotels and multifamily is because we're a business, we're considered a small business with the government. We got the EIDL disaster loans, we got the PPPs. So even though we were running at hardly anything occupancies on some of that, I actually kept the full staff,
right?
And they appreciated that. Until recently, and now no one wants to work. That's a whole other story.
All right.
But during COVID, I took care of them, and and it was really nice that we got that a lot of city grants, state grants. I was a grant making machine, finding machine, and that really helped us, and that is what kind of brought us through COVID, because the ones that did not do well during COVID will still do the best 5 years from now and 7 years from now, are the ones that are in the corporate parks.
Sure.
We have some really nice, beautiful property in the town that is just booming with chip manufacturing and just all this type of business and all this stuff coming in, and just the land itself is going to be worth 5 times, and so that's that long term where that'll just really appreciate. But those are the ones that kind of struggle because it needs that corporate business.
Mm-hmm. That close by rack, basically close by stays, that the foot traffic, basically people staying nearby where they're working. Yeah, I've seen a lot of that stuff there.
Yep.
So when you're buying your hotels, and you mentioned your build up, you've bought existing ones primarily first, and then so you bought the business. You're looking at the NOI or the operations aspect of it, and going through. So what are you kind of looking to buy off of? You said you want to try to buy it at what kind of multiplier of the operations?
So what we do is, number one, look at where it's at. I'll buy something at what they're asking if I see. Too many people, especially in the multifamily world, they sit there and go, "Oh my God, I have to have a 20%. I need a 30% discount." Like, who cares if you know that there's growth? If you look at the 5-year plan of the city, and you see that 3 manufacturing plants are coming in, there are permits for 4 or 5 new build multifamilies, different industries are coming in. If there's stuff happening, why not pay? That's just one of the things. So, but we look at, is it now a state owner? Is it being mismanaged? If I can go in and look at the P&Ls, I'm like, why in the world are they doing this? And I'm wondering, is the ownership even paying that much attention to it? Then I know that we have something that we can go in and do, because we can just put in our own people and rehire a GM and then work it. But we do look, that's kind of similar to multifamily. I look at, instead of the NOI, I look at the gross and say, okay, if it's 1.5 now, million gross, how long and how do we see a pro forma where we get it to 2 million a year? Because that's what the hotels are based off of. If I can buy it at 4.5 times gross at 1.5, even if it stays at 4.5 and I can bring it to 2 million, investors are happy.
Right. Now, how are you raising capital for the syndications, putting funds together? What's your kind of financing strategy?
Yeah, most of it's syndications. I've done some JVs. You have someone that has a lot of money. It's like going, hey, it's like, I want to be the only partner. Like, okay, that's fine. That's less work for me.
Right.
But syndications, I only do accredited investors. I learned the hard way. Even I don't want you to ask me for your money back 6 months from now.
Right.
Okay. I'm just not going to do that. And I don't want to put up with that. I look at people that know the ins and outs of, real estate investing. I'd love it if they've done it before. They've done, a lot of my investors syndicated multifamily, and they're just diversifying,
Right.
or they've done some rentals, they've owned some things, and they're looking to diversify. They're not putting their whole nut in with us. So it takes a lot of pressure off of me, because you can imagine if during COVID, and it's like, sorry people, we're not going to have any distributions, because it's more important that the survival of the asset is the most important thing. You need the investors to understand that.
Right.
Okay, you're not losing money. It all rolls in. It rolls. You're still going to have it, and you're still going to make 2.3, 2.5 times your money. But you have to understand why we're doing and what we're doing to protect the asset.
Makes a lot of sense there, because that's the most important thing. And that's, yeah, when you start dealing with lower level investors, it is often their full nut. And if something goes awry in their personal lives, like we've seen happen, layoffs, things like that, oh, I gotta get my money back. Well, you're not really an investor at that point.
Yeah, I've had some people say, hey, I want to refinance my house, do a HELOC and put it in to one of your hotels. I'm like, no, don't do that.
Oh, exactly. or hey, I got a credit card, 0% interest for 6 months. Tap it out.
Right. Let me cash out my credit card. I just want a piece.
Yeah.
No. I'll let you stay in the hotel. How about that? For a discount.
Well, there's people do stupid things. They get excited. I mean, we've seen people come to us like, oh, we invest in this apartment complex. They overpaid for it. Now we're not getting anything. They changed the contract, so it's not a return on principal. It may be a return of principal. There's a lot of crazy stuff you got to read out there to make sure out there for you. So you really gave some great qualifications. Near a hotel, you don't mind the smaller cities, because it may be the only thing there. There are a couple of things there that do it. We see that in some of the small towns in Texas and other places like that. The hotels still do good. Are you looking more as you've evolved here now, just a fresh start? Are you interested in distressed stuff, that as long as the numbers make sense for you?
Yeah, there's a couple of things we're looking at buying some distressed, and here's the thing: is not really distressed. I don't know if you know what the CMBS loans are. If you're familiar with that, the hotel owners that had the CMBS loans, really, they're the ones that really suffered. When you have a market-based security as your lender, they don't have the mechanism to give you 4 months deferment.
Right.
Okay, you can't call the stock market and say, hey, can I not pay for 4 months? And their help came way, way too late.
Yep.
When there was help, and they were never allowed to get a second. So no EIDL. None of that help. They couldn't sit there and say, hey, I have some cash, I need to refinance, I'm going to get a second. Can't do it. So you have assets that are coming on, and it just takes a long time. People thought they'd see a lot more now, but the whole machine just takes a long time for that to happen. So you're seeing those type of assets, and they could be really performing.
Yep.
And they could be great assets. I've seen several in Texas that are, that could really, really work, but they just got so far behind, and there's no deferment, that by the time that help came, it's like, oh, well, now that it's been a year and a half, we'll give you 2 months off. Well, how about the 6 months that I haven't paid? So those are the things that are starting to come on, and those are the auctions that are going to be coming on. Those are going to be, there's opportunities for you to look at the notes and go to the lender and just say, hey, you know what, we're just going to take it over. We'll bring them current and just take it over. And when you have that type of an asset, they're really not that bad. They're not something you need to put millions of dollars into it. They're not that distressed. They got behind because of that really bad situation.
Well, they just need somebody to come in that understand that, and maybe they buy the debt at a bit of a discount, so it gives them some flexibility
Mhm.
to allow the borrower to start back over. And then if they get back on track, it's a pretty good cap rate. Or you just, hey, take it over, take over the asset and start managing it yourself and going from there.
Yeah, it's a fresh start. Now that the debt's been paid off, you just need someone with the capital to come in and say, okay, you know what, you owe 150, you're behind 150,000, 200,000. Here it is. And the bank's happy. They do the whole credit. Oh, you have 5 hotels. Yeah. Okay. You know what you're doing. Here you go. And you can get the asset for not very much money.
Right. Yeah. That's the beautiful thing is even some banks too out there. And I wouldn't say the CMBS stuff, but we see a lot of, the smaller banks that, you look back at the numbers and, your local banks finance about 60% of the commercial stuff out here that's below, $5 million asset. They're flexible on that. If somebody's coming in and has management experience, they may even carry that financing with a much smaller down payment and say, okay, you're going to management, bring 20% to the table. We'll carry the rest for you and move it from the non-performing side to the performing side of the bank.
Yeah. Especially if it's a smaller community bank.
Yeah.
Because, 2017, 2018, 2019, you had these smaller community banks that wanted to get a foothold. So they were giving restaurant loans, they were giving hotel loans, and then boom. And they're like, oh man, we're not big enough to absorb 3, 4, 5 of these $5 million hotels. What can I do? And then, we become the savior, right?
Exactly. Now, what's your long-term goal, Mike? You have an idea of how many doors you want to own or what the next step is for you?
Well, the next step is, we're getting ready within the next 12 to 18 months. Looks like we're going to be building ground up 3 hotels. We may look at some distressed stuff if it makes sense, if it meets those different criteria. I'm not going to buy something if it's a great deal and I know it's like, well, there's just one driver.
Yep.
Because then it's just it may be a good deal on paper, but then the stress that I'm going to have is too much. But the goal is, and the reason why we like ground up right now is the automation. And you can build, and I know the building costs are up, but you're building and it's over a 2-year period and you're amortizing that build period. But then you have a brand new box and you can actually have more, because if you look at some of even the distressed in that same market, the $2 million or so that you have to put into it to get it into the next gen for what that flag wants. Now you're up at that area, and then you're like, okay, now what is going to go wrong with it? But if you can build something, and some of the new concepts are really, really nice, and because the flags are wanting to expand, they're willing to really discount, they're willing to give us, maybe $5,000-$6,000 a door just to build.
Wow.
And maybe defer franchise fees. So there's a lot of things that are going on because they're wanting to expand. But the automation is a big thing. Right now you can have a hotel where there's no front desk if you want.
Right.
You can do a lot of things like that, and that appeals really to me, especially now because the employee situations.
Sure.
There's a reason why there's kiosks at McDonald's and there's self checkouts at the grocery stores.
Right. Well, I've experienced, like, I've seen that with Marriott too, is doing that, where it's the whole check in with your phone, your phone's your key, in and out, stuff like that. I experienced just in Denver during COVID. I didn't have no room service. I mean, they had room service and stuff like that I could have done, but it was like, didn't even go by the front desk, went straight to my room at night.
Right.
Didn't even talk to anybody, checked out, and everything was very automated. I mean, that's the thing, especially with costs going up for labor, having hard to find people that want to work, especially graveyard shifts or stuff like that. It's difficult there.
And they even have robots coming up and bringing you towels now. I mean, you can do anything you want.
There's a whole Tally, the towel robot. That's nice.
Towel robot. It's crazy what you can do. But yeah, and that's the future of hospitality. And if you can have one person working instead of several, that really, you won't believe how much money they can save you in the long run.
Oh, I don't doubt it for a second. Now, Mike, I have to ask a question. Do you teach the stuff? Do you offer classes, or what do you do? What's stuff there for helping?
Yeah, I don't have anything set in stone. I'm just too busy.
Sure.
But there are people that on the side, they'll say, hey, how much for you to sit with me and Zoom with me, once a week, or, if I show you these deals, I have someone that I met on LinkedIn. It's like, hey, can I pay you to look at this deal? And I'm like, okay, I'll do that, but it'll still be their decision. You have to have those things. I'm not going to tell you to buy it, and then if you screw it up, you're not going to come to me.
Oh yeah, no, it's
things like that. But
it's in a commercial spot. It's definitely hey, buyer beware versus
yeah, it is. But that's if you look at goals, the goal is we're going to have our goal is probably maybe a dozen hotels in our portfolio. We want to get to there. And then, we're kind of flipping some and kind of selling some, and every 7 years, because, the great thing, like I said, about this business is, you don't have to retire. You just have to then hire people that take, workload off of you. But my partner and I, my main partner, we are wanting to get into coaching. We just see a really big need for those people that want to make the transition from multifamily to hotels.
Sure.
So we are working on getting that course down and what it's going to look like. But that's just another thing that load on us. But we'll eventually get there, maybe soon. But the acquisitions right now are number one.
Are you seeing any opportunities on some of the lower valued or even some of the shutter hotels to turn those either back into operating or converting them into multifamily?
Yeah, there's a couple of things that I'm seeing now. Is if you can, it's a lot better if you can find an older extended stay, because they'll have like a kitchenette, and they
Sure.
have a lot of those types of things. We're seeing a lot of assisted living conversions. The baby boomers are getting older, and there's a lot of them. And what is nice is you can actually own the land and own that property, and then have an assisted living company come in, and they're basically leasing that space from you, and it's a lot higher rent than you can on the daily rates, the ADRs. So that's we're seeing that a lot, especially if it's near a hospital.
Yep.
We're seeing that.
I saw an article where that made me think about that. When you brought it up, a guy who didn't have a lot of money in retirement, but he's living in Holiday Inns across the country for $40 a day, because there's 4,000. And so I got a gym, I got hot food, I got a little happy hour, I got a pool so the grandkids can go, I can travel.
Yeah. You just have to be careful that they don't stay more than 28 days in a row, because then they become tenant.
Right.
And then you actually have to evict them from a hotel.
And that will all vary on the city and the state and on the eviction rates.
Yeah.
That's never a good thing. You don't want a towel delivering to them at that point.
That's right. That's right.
Good stuff. Mike, I see the guitars hanging on in the background there. You play a little bit, I imagine.
A little bit, so something that you always need, is downtime, stress relief. I like to work out in the morning to get my day going the right way, and then at night, just to kind of forget about all the fires and all the stuff. I just put on the headsets and just kind of wind down, play some guitar. It's so important to not overwork yourself. You need that downtime.
Amen to that. Who's your top two guitarists you're a fan of? I know there's many out there, but if you had a couple.
Yeah. Well, I love Slash.
Yeah. Okay.
That middle guitar, I know everyone else can't see it, but that's a custom Les Paul. Mm-hmm. One of the ones that actually, Slash plays.
Very nice. Very nice.
From
what year? What is it? What year is that?
That's a brand new.
Oh, very nice.
It's a brand new. It's actually a custom Slash. So Slash actually makes his own custom Les Paul, and so that is his special pickups, his humbuckers. It's his own type of strings, his own type of tuning, his own. So it has that.
Very nice.
That slash. Can't play like him, but
hey, but still though, we can all dream and act like it there for you, right?
yeah. And I play a lot of like AC/DC and things like that. So I love Angus.
Yeah, there you go. Have you ever we came across the Kiss cruise that they've had for years. I don't know if have you heard of that?
No.
There's a cruise that Kiss puts on most years where it's all Kiss fans and the whole Kiss band, Simmons and everybody comes out
and makeup. They have a jam session with Gene, and you get a guitar as part of it So it's an interesting. The Kiss cruise. They didn't have this last year because of COVID, but I have. We've got a friend who's been on it like 10 years in a row, and they jam out. It's just that'd be cool.
4 days just with everybody from the band.
Yeah, that'd be very cool.
Very cool. Well, Mike, thank you for jamming with us today.
Absolutely.
It's been a fun. Best way for folks to get a hold of you or reach out to you, LinkedIn or a website. What do you prefer?
Sure. Yeah. Well, LinkedIn's under Michael Stohler, Stohler, and website is Gateway PE, as in private equity, gatewaype.com.
Right. And we'll have those links in the chat roll and everything there for you. Mike, thank you so much, bud, for coming on the No Close Show. Look forward to talking more with you here in the future. Go out, rest your voice now for the next round of stuff, right?
Yeah, there you go. Thank you.
Thanks so much, Mike. All right, guys, you heard it here. Something definitely take a look at as you're reaching out to banks and asset managers. Take a look at that. Mike shared some really great nuggets to look for. If it's something you're thinking about diving into or looking into, definitely worth checking out. It's an asset class that we see a lot of distress out there, but a lot of opportunity if you know how to step in and operate that or know how to look at the P&Ls and identify opportunities. So go out there, take some action, everybody, and we'll see you all at the top.